You
now, in
think the
Shanghai,
silver
physical
price
silver is
flashing on your
exchanging hands
screen
at
right now is the
$12 more
real
per
price?
ounce.
Think again. Here on Safe Haven Wealth, we dig deeper than the numbers brokers display, exposing the hidden truth that most mainstream platforms won't touch. Right now in Shanghai, physical silver is exchanging hands at $12 more per ounce than what the CME shows in New York. That's not a rounding error. It's not a time zone lag. It's a structural gap that reveals where real demand is living and where paper markets are just a controlled illusion. A few days ago, the largest metals futures exchange in the world went completely dark for 90 minutes, erasing thousands of retail limit orders in the process. Meanwhile, physical buyers in Asia kept paying top dollar, oblivious to what artificial pricing was dictating elsewhere. This divergence isn't subtle. It's screaming at anyone willing to see it. And if you want to understand what this could mean for your wealth and the massive opportunity that's quietly forming, you need to stay with Safe Haven Wealth. Markets are breaking in ways most people will never see, but the data doesn't lie. Keep watching, because what happens next could change everything you thought you knew about silver trading. While most traders are staring at screens showing stable silver prices, the real story is unfolding behind the curtain. On COMEX, registered silver inventories have been dropping session after session, disappearing in millions of ounces without the broader market noticing. Meanwhile, physical demand isn't just steady, it's climbing. Buyers in Shanghai are paying premiums well above Western prices, and silver-backed ETFs are seeing consistent inflows as sophisticated investors shift capital away from futures contracts. The contrast couldn't be starker. On paper, everything seems orderly, but the real-world scarcity tells a different story. The futures market, dominated by leveraged paper contracts, hides the structural risk from most participants. Every rollover, every halted order, every artificial pause in price discovery compounds that hidden tension. The result is a widening gap between what traders think they own and the metal that actually exists for delivery. Safe Haven Wealth is here to show that when physical reality collides with paper mechanics, volatility isn't just likely, it's inevitable. Understanding this divergence now could be the difference between protecting wealth and being caught off guard when the markets finally reconcile paper with reality. Ignoring these signals may mean missing the single largest opportunity forming quietly in silver today. Imagine you're at your desk ready to buy silver as momentum surges, and suddenly the market freezes entirely. That's exactly what happened during the 90-minute CME halt. Every day order and good till day order was systematically wiped, erasing the careful positioning of retail traders. When trading resumed, silver didn't rebound. It plunged $3 instantly, a vertical drop driven not by fundamentals, but by algorithms executing in a freshly cleared order book. Institutions with co-located servers and pre-programmed systems thrived, while retail traders watched stop losses fail and limit orders vanish, a stark reminder of who truly controls the flow. This wasn't random. Historical patterns show these disruptions repeat whenever physical delivery pressure peaks, halting markets, clearing order books, and favoring the fastest, most technologically equipped players. Here on Safe Haven Wealth, we track